Welcome to the All Financial Hour podcast with Steve All.
Forbes says that Magic Johnson is worth $1.2 billion at age 64. But get this, he only made $40 million when it comes to his career on the basketball court. Everything else he's made is because apparently he's a huge and smart investor. He's invested in Starbucks, movie theaters, 24-hour fitness, and even a life insurance company. I mean, Steve, this is ridiculous. He's basically creating multiple streams of income for himself, right?
Yeah, that's the idea. And for every Magic Johnson, there's professional athletes that's filed for bankruptcy. So a lot of them do make it, and most of them that make it bring in financial people very big. You start to look at Michael Jordan. His mother was fantastic. LeBron James, he got with people immediately because of the amount of funds that he had. So you go from that. And Tiger Woods, they're joining that category, and Tiger's just a phenomenal person to watch play the game of golf. He just played it so fantastically. But all of those people had good financial people behind them. When we start to talk about income, and I think that's one of the questions when people actually come in and sit down in the office with me the most is, how am I going to replace my paycheck in retirement? And most of us aren't in Magic Johnson's position where we just start a new company, invest or do that. We just don't have that availability to do that. And Cindy came into the office. She had about $1.2 million, had income coming in from Social Security, a pension. She was divorced, so she had a lot of questions when she came in. So we figured out what her lifestyle was. And the difference between Cindy's lifestyle and the incomes that we had about a $2,000 shortage. And her big question was, how do I replace this? Now, I don't want to work. I want to do it, but I have this gap. I said, there's 3 ways that we can do this for you or anybody else. It's the idea is, 1, we can set aside enough money that we can use the 4% rule, because everybody talks about that one. I said, I could build you a dividend or bond portfolio that pays around 4.5% to 5%. You could live off of that. And then I said, there's the thing called the fixed indexed annuity with an income rider. When we do something like that, I'm setting aside enough money, the insurance company will guarantee an income stream at such and such a date. So we looked at it, a personally funded pension. And I know there are a lot of you all that are out there right now that have that gap between what your, quote, lifestyle expense is and what your current income is. So do we have a gap? If we do, how do we fill it? How are you going to replace that paycheck in retirement? Because I think the most important thing is that personally funded pension, an annuity, guaranteed payment for the rest of your life, guaranteed by the insurance company for you and your spouse if you choose to do both. And I just set aside a part of my income to be able to do that. Give me a call now. Ask about personally funded pensions and how we might be able to help you replace your paycheck in retirement.
The stock market surprised a lot of folks, having a big comeback in 2023. But one economist known for his dire predictions, he is at it again. He's kind of a Debbie Downer. I'm going to give you a little disclaimer there. Harry Dent believes that this year we will see the biggest crash of our lifetime.
These markets are stretched, especially with the biggest tightening since the early 80s, one of the biggest ever by the Fed. That will knock the economy down and lag, even though it's not showing yet. It's not showing it because it happens on a year and a half lag. Everything does. That's where the Fed gets in trouble, this big lag. Remember that the next wave down should take us back to the COVID lows, which is going to be down 50 to 60% for the various U.S. major indices.
So Steve, Dent recommends just staying out of the market for the next 6 to 12 months. That's a really long time. And I have to know your thoughts on this. I mean, this is ridiculous.
I don't disagree with everything Harry says. I think some of the things that Harry says are very good. You can get Harry Dent, we're going to lose 50 to 60%. And you got the other people that say the S&P 500 is going to be up 10 to 15%. So which do you listen to? Usually the one that you want to hear, but we go from that. But I believe that pulling out and doing that, market timing is almost never successful. I can't say that it's always, but it's almost not because market timing is difficult. I remember I got a phone call from a caller on the radio, and they called me up. And he says, I'd like to sit down and talk with you. Okay. I said, what's going on? He goes, well, back in 2007, there were signs in 2007 that the market was overextended and we were going to have problems in the banking. So he said, I went ahead and pulled everything out of the market. And, in 2009, I was feeling really good because I didn't lose 30 to 40% of the money like a lot of the people standing around the water cooler did. He said, but, I'm not sure when to get back in. So I missed quite a bit. Mm-hmm. That call was in 2019. That was almost 12 years later. The guy, every time he thought about getting back into the market, he would go, oh, it's too hot. It might go back down again. So he missed the rise from 2009 to 2019. So I think market timing is the thing that really hurts almost everybody. Because I believe Market Guard, Brad Jenkins, build his portfolios. You got to have the right companies that you've put into your indexes. Mm-hmm. You also have to have the right allocation. How much of each is very important. We start talking about 60-40, 70-30s and all that. And then how much risk do you want to take?
I was just going to bring that up, yeah.
And I think those are the most important things that we look at. And then I like when I build for me, you got two different sides. That's the investment side. Build a portfolio. Give it the availability to say those most important things, when to hold, when to sell, when to buy back in if you decided to get out. When are those things? I think all that's necessary. But I also believe it's important to have a portion of my assets in an asset class that cannot go down due to market volatility. Well, if I got 30 to 40% of my assets that can't go down due to market volatility, I might be able to be a little bit more risk with the other money because I've got that money that can't. So building a portfolio that matches for whatever the market's going to do. Because if I build one and the only thing that we do is we just have tremendous markets for the rest of your life, probably not going to happen. We are going to have bear markets, 20% declines. It's part of a market cycle. They are going to happen. My question is your portfolio designed for whatever happens in the market? If you don't feel that it is, call now. Allow us to do that risk-reward analysis. Find out what you have in your portfolios. And we can find out, could you do the same with less risk? Because as I always said, I believe it's about need, not greed. If we don't have to be that risky, why do it? Give me a call now. Allow us to assist you in your portfolios.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.